Todd Rosenbluth. Let's talk about some of your favorite funds for 2013. Starting off with the Mayors and Power Growth Fund. Had a great year in 2012.
Yeah, it did, and we think it's positioned well to do well in 2013. Exposure to industrial stocks, exposure to healthcare stocks. S&P Capital IQ is positive on both those groups. So companies like Medtronic, like 3M, like Honeywell, those are stocks that can do well, we think, in 2013 based on a top-down view. This fund has a good long-term track record, a low turnover approach, low expense ratio. We think it's a good way to play the multi-cap space in 2013.
Speaking of good track records, you're also a fan of Bill Nygren's Oakmark Fund. Let's hear about this one once again, I suppose.
Yeah, I mean, it again has done well in 2012, but we like it for 2013. More exposure to financials and consumer discretionary stocks like a Capital One Financial or Comcast. You know, those are some of the top 10 holdings that we like. Again, a very long-term approach, very patient strategy, and as you mentioned, a very good, strong, risk-adjusted track record to support the thesis for this fund.
Well, those two funds concentrate, they're blend funds, but they concentrate more in large cap stocks. But you're also a fan of the Homestead Small Company Stock Fund. It's a small cap fund, and small caps underperformed large caps in 2012. Why do you like this one for 2013?
Well, so it's done well in both 2012 and historically. It's done very well when we've seen small caps outperform and held its own when we've seen large caps do well. It has a bit more of a higher quality focus for the small cap space. Also has exposure to industrials, which we like. Manitowoc is one of the larger holdings that's there that we cover at S&P Capital IQ. Cracker Barrel is another top 10 holding that has a high quality focus. Very patient strategy. You're going to see a similar theme in all these equity funds. We like long-term investment strategies with proven records and high-quality stocks, and those three equity funds all fit that bill.
On the bond side, you like the TCW Core Fixed Income Fund. Tell me why you like this one. A lot of people are saying that bonds are not the place to be in 2013, but I guess you still have to have some exposure.
Yeah, we think you still need to have some exposure to fixed income. This is a very diversified fund, has exposure to mortgages, mortgage-related bonds, to corporate bonds, some government bonds. Very good diversification. Manages the duration pretty well, so it's lower than some of its peers in case we see a rise in interest rates over the longer term. It's up 7% this year in 2012, and we think it's positioned to do well in 2013. So the TCW fund is one of our top 5-star ranked funds at S&P Capital IQ.